Question 2, statement of comprehensive income. So this is the income statement. Let's start. The following information was taken from the records of Sebenza Traders on 28 February 2023. That's the last day of the financial year. The business uses a markup of 40% on cost, and you are required to prepare the statement of comprehensive income. So the income statement for the year ending 28 February 2023. So step number 1, when you start your income statement, let's fill in all the missing information, eh? So for the income statement, we only use these nominal accounts. Okay, that's the first thing. The second thing is we must remember this doesn't go to operating expenses. So no interest goes there. And then we must remember we have our sales minus our debtors allowance, eh? Everything on the credit side is an income. So this is an income and this is an income. And all of these are my expenses. Let's start with sales. So sales is 588,000. So I'm going to put it in 588,000. And remember, we always minus debtors allowance, eh? So minus 6,800. Okay, cost of sales is 420. Open the brackets for 20. Okay. Then we go to commission income. It's already there. Then let's look at the other income. We have a rent income. Okay, rent income. Okay, let's look at our expenses. Salaries is there already recorded. So that's out. Stationery is already recorded. So it's this one. And then advertising is recorded. So we have to record everything else here in this circle, eh? So let's start. The first one is insurance. So I'm going to write down insurance. And that amount is 12,500. So that's out. Then bad debts. Let's see. Our bad debt is 4,800. Next, we have water and electricity. You can write that out, eh? I'm just writing that 19,100. Then bank charges 4,200. And then packing material. Okay, that is 7,100. We wrote them all in. Then we have operating profit. After operating profit, you will have interest income. So interest income, open bracket. So it's this interest over here, interest on the fixed deposit. It's an income because it's on the credit side of the trial balance. So this amount is 1,620. And then here we will have interest expense. So this is the interest on the loan. Okay, so that's interest expense. I don't see any interest on a loan here. So yeah, we'll just leave it like that for now. So now we can start with our adjustments. Adjustment number 1 says the water and electricity account for February 2023 has not been paid yet. Okay, so this is the last month of our financial year and this account has not been paid yet. So if something hasn't been paid yet, we call it an accrued expense. And anything accrued, you must go add to that account. So to water and electricity, we're going to add 1,830. So I'm going to go to water and electricity. I'm going to add 1,830 because it belongs to this financial year. Okay, so there we're done with that adjustment. Next adjustment is adjustment number 2. Stock with a selling price of 2,520 was donated to a local orphanage, but no entry has been made. Okay, so the two accounts there is trading stock because that is what we donated. So trading stock and donation. Okay, So I don't see donations on my trial balance. So that means I have to go add a new account here under expenses called donations. Okay, so the donations, we always do at cost price. Okay, so this was the selling price. So let's work out the cost price. Let's look at the markup percentage. The markup percentage we wrote here, the markup percentage here is 40% on cost. So to get the cost price, I'm going to say cost price is equal to my selling price times 100 divided by 100 plus my markup. My markup was 40. So let's work that out. So my selling price plus 100 over 140. Let's work that out. Okay, so cost price, let's write, cost price is my selling price divided by 1 comma markup. My markup is 40. So selling price is cost price is 2520 over 140. And that gives me 1,800. Okay, so my donations is for 1,800. And in my trading stock, I'm going to go to the trial balance. And I'm going to look for trading stock. To that trading stock, I'm going to minus here 1,800. Okay, so let's go to our next adjustment. Our next adjustment says, according to a physical stock take, so here's our stock take, at the end of the year, the following items were on hand. So when they counted the trading stock, we had 41,000 rands worth of trading stock. So I am going to, let's quickly see if we made a trading stock surplus or a trading stock deficit. So what we do is we take the trading stock from the trial balance. So we say 44,000. So it's this over here. Okay, minus the donations. And let's minus the stock take. Okay. If this is a positive answer, it's a deficit, eh? So if you do that, you get 1,200. So if it's a positive answer just like that, it's a trading stock deficit. So I'm going to write here under expenses, trading stock deficit. Just remember, if that was a minus now, it would have been an income. But you don't put the negative in, eh? So then I say 44,000 minus donations minus the stock I counted. And the answer is 1,200. Next, you also counted packing material. And the packing material on hand was 1,950. So we take the packing material from the table. So we recorded that already over here. That's packing material on the table. And then here, we just minus what we counted. So we counted 1,950. And if you total that, you get 5,150. Okay, next adjustment says insurance includes an annual premium. So this was for 12 months, eh? Okay. Paid for the period 1 September 2022 to 31 August 2023. Okay, so insurance includes this premium. Okay, let's go. So for this one, let's draw our financial year. So our financial year ends 28 Feb 2023. Let's draw our financial year. So our financial year ends 28 Feb 2023. That means it starts the 1st of the next month, so the 1st of March, but the previous year, so 2022. Okay, now this insurance premium started on the 1st of September 2022. So the 1st of September is somewhere here. And then this insurance premium ends the 31st of August, so after our financial year, over here, 2023. Okay, so do you see this part from year to year? That is the annual premium. So the annual premium is, the price is 3,960. That's for 12 months, eh? So that's for 12 months. To get 1 month's insurance premium, we can divide that by 12 and see what we get as our answer. I get 330. So that's per month. Now, can you see? Let me just show you. From the beginning up until the end, this whole 12 months over here, some of those months are in our financial year and some of those months are outside our financial year. So from year to year, that's in, and from year to year, that's out. But we already paid. So in this adjustment, we want to take out the purple part. So I'm going to count from February to August is how many months? So it's March. I'm not counting February because this is the end of February. It starts here. So March, April, May, June, July, and the whole of August. So that's 6 months, eh? So I'm going to say 6 times the 330 that you pay per month. And then I get 1,980. So that 1,980, I must take away from my insurance. It doesn't belong to this financial year. So I'm going to go to insurance and I'm going to minus 1,980 because it doesn't belong here. And then I total and I get 10,520. Okay, let's look at adjustment number 5. It says rent for February has not yet been received. Okay, so this is an accrued income. You must still receive it. Anything accrued is a plus. Okay, the rent was increased by 300 Rand per month from 1 July. So let's quickly work this out. So we have a timeline. The beginning of the financial year. Okay, so let's draw our financial year. So beginning is 1 March 2022 and the end is 28 Feb 2023. And this month has not been received. So that means we received from year to year, but we haven't received from year to year. So this part is the question mark. How much must we still receive? So the rent increased by 300 Rand from 1st of July. So somewhere here, 1st of July 2022, the rent increased. Our rent income is 36,200. So from year to year, that part is 36,200. But the rent wasn't the same for every month. So from year to year, it was the same amount. And then from year to year, it was the same amount each month. So let's count how many months from year to year. So it's March, it's April, it's May, it's June. It's not July, eh? So that's 4 months. Then from year to year, let's count. So that is July, August, September, October, November, December, and January. Okay, so 1, 2, 3, 4, 5, 6, 7. That's for 7 months. Okay, I can't just take this and divide this by 11, eh? Because although I paid for 11 months, the monthly installments, they were not equal. So I'm going to say 4 times something, so 4x. 4 times x plus 7 times x plus 300. So x is the original rent before the increase, eh? So for 4 months, I paid the original rent. Then for 7 months, I paid the original plus 300. So that plus that must give me a total of 36,200. Okay, and now I'm going to try and work this out. So 4x, 7 times x is 7x. 7 times 300 is 2,100. And this is equal to that. Then I'm going to say this is 11x. And then 36,200. I bring this over minus 2,100. 11x is equal to 34,100. And then to get x, I divide by 11. But remember, x is the original rent, eh? So let's divide that by 11. I get 3,100. So this 3,100 is the original rent. So it's this part over here. That was for 4 months. The part that's outstanding for us is over here after the increase. So for that 1 month, the rent is the original. So this original plus 300. So that will give me a total. So that will give me a total of 3,400. So it's the original plus 300. And that gives me 3,400. Remember I said anything accrued is a plus. So I go to my income statement, I look for rent income, and I say plus 3,400. Close the bracket. And if you total that, you get 39,600. Okay, next adjustment over here is the loan statement. So the loan statement has been received from SAB Bank, and this is at the end of the financial year, balance at the beginning, repayments, interest is a question mark, and balance at the end. So the reason they give us this loan table for the income statement is to work out this interest over here. So the formula is balance at the end plus repayments minus balance at the beginning. So let's write that in here. So balance at the end, 117. So 117,300 plus repayments. So plus 46,200 minus balance at the beginning. Gives me interest, eh? So that will give me 13,500. Put this in bracket. As that is an expense. Next adjustment says provide for outstanding interest on the fixed deposit. Interest is not capitalized. If they say outstanding, the only thing I can think of is here's your fixed deposit. So you invested 24,000 at 9% per annum. Let's quickly work out how much interest you must get in 1 year. So 24,000 times 9%. Let's quickly see how much is this. I get 2,160. So this is how much interest I should get as a business. But when you look at the interest, we didn't receive that. We only received 1,620. So we must still receive the difference. So I'm going to say this minus this, I must still add to my interest. So if you work that out, you will get you will get 540. So let's add that interest. So we must still receive accrued income, look there. And then the total interest for the year is 2,160. Let's look at our next adjustment. The bank statement for February reflected the following: EFT fees, credit card levies, and interest on current account. So these two will be considered bank charges, eh? So we will group them together, but interest will be shown separately. So interest on a current account is an income. So here by my interest income, let's quickly go add plus. So I must still add 220. Okay, now I can total. I get 2,380. Okay, and then bank charges, I add these two together. So these two I'm going to add together and add that to bank charges. So plus to my bank charges, this will give me 260. Let's total that. And then bank charges will total to 4,000. 460. Okay. Last adjustment is depreciation. So depreciation is calculated as follows. So depreciation is an expense. Let's write it in. Depreciation. Okay, so I'm going to do my calculations here if I have any. So on vehicles, it's 10% on the cost price method. And on equipment, it's 15% per annum on the diminishing balance method. Then we have a note. Additional capital with a cost price of 12,400. So additional equipment with this cost price was purchased on the 1st of December. This transaction has not been recorded. Okay. Depreciation. I'm first going to do depreciation on vehicles. Okay. We have no new vehicles. Okay, we have no new vehicle, so this one is straightforward, eh? So I'm going to take, it's 10% on the cost price method. So I'm going to look for the cost price of vehicles. It's this one over here. So I'm going to write 280,000. 280,000 times 10%, eh? And that will give me 28,000. Okay, and then I'm done with vehicles. Then I'm going to do equipment. So with equipment, we have to do our old equipment and then we have to do our new equipment. Our old equipment is, let's look for equipment. There's our cost price, but we're using the diminishing balance method, eh? So the method says cost price minus accumulated depreciation times percentage. No number of years for old, eh? So we don't have number of years, or we don't have number of months. We don't have number of months for old equipment, eh? So our equipment is 130,000 minus our accumulated depreciation on equipment. It's that one, 44,600. And then times the percentage. Let's see, what was the percentage? 15%. So just do this calculation first, and then you say times 15 over 100. And then we'll get an answer there. Let's quickly take this away. So let's work out that answer for all. So I get 12,810. Okay, so that's for old. Let's do for new. So for my new equipment, so here's the adjustment for the new equipment, eh? So new equipment, CP, cost price minus accumulated depreciation times percentage. But remember, new equipment will never have accumulated depreciation, eh? And then times the number of months. Okay, so cost price of the new equipment is 12,400 minus nothing because there's no depreciation at that moment, times the percentage, 15 over 100, times the number of months. Okay, so the number of months refers to from the day you buy it, so 1 December, to the end of the financial year. So let's count. It's the whole of December, January, and February. So I get 3 months. So times 3 over 12. Let's see what that answer is. I get 465. Okay, so in total, we worked out depreciation on vehicles. It's this amount. Then we worked out equipment on the old equipment. Then we worked out equipment on the new equipment. Then we worked out depreciation on the new equipment. So we worked out depreciation on this, and this. So I'm going to add them all together and show the workings in my income statement. So next to depreciation, I'm going to write, let's change my handwriting again. So here I'm going to write, okay, let's see if it's better. It was the 28,000 plus the 12,810 plus the 465. Close the bracket, and the total for that The total for that is depreciation 41,275. Okay, we're done with all our adjustments. So now let's just total, eh? So close this bracket. Okay, so let's just total. So for sales, I get my sales to be 581,200. Okay, so we can total. Nothing happened to cost of sales. So this stays 420,000 in bracket. So now sales minus cost of sales gives me gross profit, eh? So the gross profit is this minus that. Okay, and that gives me 161,200. Then I have two other operating incomes. The other operating income consists of these two amounts. So you're going to add them together and put that total here on top. So if you add those two together, you get 49,750. And then let's highlight again. Gross operating income consists of this one plus this one. You add those two together and this will give you this answer here. And that answer there I get 210,950. So that's how you do that. Then I have operating expenses. So I'm going to highlight again. So operating expenses is a block here by itself. This block comes from this whole block of expenses. So up until depreciation. So all of these amounts you will add up. So there's one total. Bad debts we can put in here 4,800. Okay. So that's in. Now you're going to add up all those amounts. When you add them up, you should. So I get here 139. 139,855. 855. Okay. Then we have operating profit. So operating profit is this over here. This is operating profit. It's this over here. So operating profit is this over here. So let's put this in brackets, operating expenses minus this over there. So that will give me an operating profit of 71,095. Okay, so now I'm at the bottom. Then I'm going to say this plus my interest will give me this line. And that gives me 73,475. And then I'm going to minus this one and it will give me the last line. My net profit for the year, 59,975. Okay, and that's how you do your income statement, grade 10s. I hope it makes sense.